Over the years, I've spent a lot of time studying real estate and how to be successful at it. And that's oftentimes what we talk about on this podcast. But today, what I want to talk about is something that's even more valuable than that. And that is how to lose money in real estate. In today's April 1st episode of the Furlough Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip people to invest wisely so that I can do this, so that in both property and residence, so that together we can lose wealth and destroy housing. I'm James, and this is my wife, Jessie.
Is this in April Fool's?
What? What are you talking about? I'm so serious here.
Is it opposite day?
No, not at all. Today, I'm sharing my foolproof strategy to lose money in real estate investing. And since this episode,
confused.
again, is on April 1st, you're going to want to take notes just to make sure you do the opposite. So I'm going to kick it off. By the way, did you know that if you lose money in real estate, it's a real bad loss?
Real estate mad.
Yep. Okay, strategy.
Okay, I am going to like this episode. I am a sucker for bad jokes.
These are some. I tried as hard as I could, and some of them are really bad.
Really
bad.
loss.
All right, strategy number 1: invest based on emotion.
Yeah.
Love
That
it.
sounds great. That is
Yes.
foolproof.
So there's one rule that I follow when losing money in real estate. It's this: never run the numbers, because numbers are cold, numbers are boring. Instead, invest based on how the property makes you feel.
That seems perfect.
Right? Yeah. Does it
a
have
great way to
countertop?
lose money.
Does it sparkle? Yes. Does the lobby smell like fresh paint? And is there poor underwriting? Dude, who cares?
Yeah, who
Perfect.
cares?
Write the
If
check.
it makes me happy, then I'll do it.
Yes. Here you go. I always say, fall in love with the property, not the numbers. The numbers will break your heart every time. The property will too, but at least it's pretty.
I feel like quotes taken out of context from this episode, real bad, like
detrimental.
real estate bad.
Yeah. How about this one? My underwriting process has 3 steps: gut feel, vibes, and a spreadsheet I never open.
No.
No? All right. So here's
If you have the foolproof way to losing money, then yes.
Yes, 100%. All right, so here's the real lesson. Obviously, good investing, there's math involved. And so professional investors, they actually look at cash flow and debt coverage and reserves, like actual stuff. Emotion's terrible for underwriting. Terrible. All right, strategy number 2. Did I tell you how many strategies there were?
Nope.
I don't remember how many I did. As many jokes as I could come up with. 6 strategies.
Okay.
All right. Always trust the pro forma. Do you know what a pro forma
Pro
is?
Forma, that's like the initial.
Yeah, that's like the underwriting
picture.
numbers that the realtor who's selling you the deal gives you. You're good to go.
It's fine.
You know what I mean?
Yeah.
If the spreadsheet says you'll make money, it's
Well,
guaranteed.
my numbers are totally
right?
accurate.
Because spreadsheets have never been wrong before,
Probably not.
especially when it's the sponsor and the seller who created them. All right, so my favorite rent growth assumption is 10% annually forever. It's basically a miracle, but it's a documented miracle, so it counts. Or how about this
my
one?
word.
If the numbers don't work, don't panic. Just rename the losses column to future upside. That's not fraud. That's Excel optimism. Yeah, I think we're good. I think we're fine.
Mm-hmm.
You don't think so?
No.
Okay, so in reality, pro formas, they're forecasts, they're not facts, and they're often very optimistic ones at that. So you just want to make sure that you stress test it. Well, what happens if there's lower rents, or there are higher expenses, or slower lease ups, or just interest rates rise over time, something like that?
Yeah.
Again,
On average, I wonder how much they are inflated or marked up or.
depends on the person. Well, the trick, honestly, that I've found is you just leave certain things off. Like, for example, this is especially true for smaller deals. Like, you look at their maintenance cost, and they're like, oh, it's super small.
You're like,
Yeah, because you did all the work yourself.
yeah.
You know, you just
The
don't count it.
realistic cost is.
And so, so that's typically what they'll do. Or they don't do a lot of the longer term stuff, and so that never shows up. And they don't have that factor as like an expense saving over time. That's usually what you'll see.
Yeah.
Is some sort of saving. Or the other one is they have the wrong type of insurance for the place and it's underinsured.
Okay.
Which is actually super dangerous, but they go, oh yes. But when
Yeah,
you get
it's
the spreadsheet,
fine, but-
yeah, and then when you get a quote, you're like, why is my number twice as much as yours? Like, I don't know, because they did something else. Okay. I'll let you turn that off while I do strategy number 3, which is to use as much leverage as humanly possible.
Right? More
Right.
leverage is better.
Yeah, if you want to lose money faster, leverage is your best friend. Yeah. Debt is kind of like gasoline. You know, use carefully, it powers growth, but use recklessly, oh man, it powers bankruptcy. Yeah. Okay, so my rule of thumb, if you can sleep at night, you're not leveraged enough.
Okay. Yes. All right.
Yeah. Or how about this one? Hopefully this works for you. I like my deals the way I like my coffee, with a lot of grounds for concern. Yes, you're welcome.
Wow.
That's my favorite one of the bunch, by the way.
Oh, my word.
So, got that.
Wow.
That's kind of, I peaked in the middle.
That's good.
I know
That's good.
you're going to tell that one later. I can already feel that one's good enough to make your repertoire. All right, so here's the real lesson. Obviously, smart investors, they use debt carefully. It's not that you don't use it. You just want to be you want to be good about it. What happens if rents drop, if interest rates rise, lease ups have taken long, all this stuff, right? You want to stress test it. You just got to be careful about it. Strategy number 4. Yes, I love this. Skip the legal documents. Who needs them? So
This is
next
like
week, we're going to be
yeah.
talking about red flags that you should look out for.
Yeah.
But here's the good news. If you don't read them, you'll never see any red flags.
I mean,
Done.
yes, that is one approach.
Yeah. So private placement memorandum, operating agreement, subscription docs, that's like 120 pages
That's like
long.
ignorance is
Who
bliss,
needs
right?
them?
You
Right.
don't know- you
If
don't
the
need to
investment were risky, surely they would have mentioned it in the first paragraph. They
Yeah,
wouldn't even
right.
be offering it if it was risky. Yeah. How about this one? I never read anything longer than a menu, and even then, I usually just ask the waiter. Or, okay, I didn't land. That's cool. I once read an operating agreement front to back. Turns out I had very few rights and a lot of obligations. So basically marriage, but with works tax treatment.
Yikes.
That was crickets on that one.
Yikes. I mean, that's not how I view marriage, but
So in
Anyways.
reality, that's the thing you want to read because it explains all your rights and how everything works. And no matter
Right.
what's in the spreadsheet or the pro forma or the pitch deck, it's all about the legal documents at the end of the day.
yeah.
So don't skip them, please.
And if you listen to the very end of next week's podcast,
Yes.
there might be
The
a
only
little
reason I know
nugget in
this, we
there.
end up recording things backwards. Did it on purpose, but so we happen to know. It's a banger one, so
Banger.
stay around for next week. Okay, strategy number 5 of 6. Here we go. Invest with people you barely know.
Oh, right.
Oh, yeah.
Yeah, I mean, you could
right?
just walk out on the street and find anybody.
Yeah, because if you're serious about losing money, make sure you invest with people you've known for at least 5 minutes.
Maybe.
Maybe.
Yeah.
Ideally, someone you met on the internet.
Ooh.
Oh, so if you're listening to this, I don't know if I like that one. Why did I say that?
Some prince in
So,
the Middle East.
by the way,
need your-
obviously,
need your
hopefully,
money.
you've seen this and you're like, I met James over the internet. Totally get that. Please set up a phone call with me. Talk with me. I love meeting new people. It's all good.
You'll do an actual
I'm-
video call
I'm a
with
person.
you.
Yeah.
They'll meet you in person.
Or even better, someone who says they're a real estate guru.
Oh.
Oh, dude. Self-proclaimed gurus are the best.
Especially if they're going to sell you like some series or documents or, strategies for
totally.
figuring it all out.
Yeah, dude. My rule of thumb, if they have a Lamborghini in their profile photo, I invest immediately. I mean, worst case, at least one of us is making money.
At least enough to Photoshop it.
Or how about this one? Track record is overrated. What I really look for is energy. Specifically, the energy of someone who's never had to explain a capital call. Yeah. There you go. So obviously, sponsor quality, that's the biggest driver of returns. So get a sponsor you trust, read the docs. Do those. I know I just made that sound really simple, but honestly, that's at the end of the day. Like the spreadsheet. And you want to look for someone who they've experienced through cycles. They're transparent. They're super conservative or just conservative in their underwriting. And they just have clear communication. Like, that's the thing. So that's what you're looking for. And the sixth strategy for losing money in real estate is to ignore reserves. Okay, so if you really want to lose money, never set aside reserves because nothing unexpected ever happens in real estate. Roofs, those last forever. Tenants, they always pay. And the plumbing never fails at 2 a.m. Actually, my plumbing always fails the day before a big trip.
Yes.
It's so annoying.
Annoying.
I don't get it. I'm so glad I now have a team of people to do stuff. I mean, I forget how many, like, it was like trips in a row. And it was some sort of plumbing thing that wasn't like, oh, let me go fix this little drip.
No,
it was like, I had to
this
dig
is
this
leaking
thing out of the ground and fix it. And oh, man, it was pain. So,
but why would you need to save for that?
I know, who cares? I'm going to do the work myself. No, it's free.
It's free.
Oh,
Maintenance costs are super low.
Exactly. So here we go. If something breaks, just tell investors it's adding to the character of the asset. It works on tenants too. It works on nobody, but say it anyways.
Yeah.
Yes. Or my other one is if something breaks, just tell the tenants it's a historic feature. I tell that people with our Lion apartments because they're like garbage cabinets. I'm like, it's historic.
It's historic.
It's garbage. You can't put a full big plate in there, but it's historic.
Vintage.
It's vintage. I know. It works. Some people, they get into it. I'm not, but I don't have to live there. So obviously reserves, they protect investors from surprises. And so you want to make sure that you have enough money in reserves. That's the end of it. Okay. So April Fool's aside, that was fun. Real estate investing, it can be a very powerful way to build wealth. Obviously, the idea isn't to lose money. But there is like some stuff behind there. So most of the big mistakes investors make are surprisingly predictable, right? There's someone, I think it's Alex Hermosi, where he's always like, if I don't know how to be successful at something, it's a good mental exercise to say, well, if I wanted to fail at this, what would I have to do?
It is kind of true because it's easier to think of ways to fail and then you just do the opposite.
Yeah, exactly.
Yeah.
So like they trust projections too easily. They underestimate risk. They invest with people they haven't really vetted. And so if you want to avoid being a fool in the real estate investing game, remember a few simple principles. Run the numbers, stress test the deal, understand the legal structure, and then invest with people who have proven they can navigate both good and bad markets. And honestly, like they do pretty well. That's the name of the game. All right. And remember, if someone ever promises you a guarantee in real estate return, the only guarantee is that you should run. And I mean that literally. Like cardio is free, unlike that investment.
Those were bad. Those were bad. I mean, they were good, but they were bad.
Yeah, I had chat help me with that. And I said, I want some bad dad jokes. And it came up with some, and I was like, well, like, those aren't even funny. Like, that's not the kind of bad I'm looking for. I was like I want like groan worthy, but it has to be funny, but I want it to groan. And it's just like,
okay.
AI is not taking over the comedy space anytime soon. I think we're good there.
Yeah.
But we did a lot of revs on that one. And I put it on a bunch of different ones. I'm like, help me out.
Oh, my word.
It was bad.
Nice.
So anyways, happy April Fool's Day. Hopefully you don't get pranked a whole bunch and you don't fall for a deal that's bad, even though someone's not intentionally trying to April Fool you. But yeah, man. So, good stuff. And if you want to learn more about what it is like to invest with us, really not in a joking way, you can learn more about our investments and how we roll at furlough.com. So with that, thanks for listening. Have a great day.